So, good evening, guys. Thanks for being here. Anyone that comes in, if you can mute your mics, please. Kevin Harris is recording this for us. Thank you so much for everything you do. You're a legend on here. In a minute, we'll be hearing from Yoga Jen, who is a successful trader with the Strat. I reached out to Jen about a month ago, as I always want to talk to people who found consistency with the Strat. I think you can all relate that it's one thing to learn and understand it, but it's an even longer process to refine your own execution of it and to prove to yourself that you have a repeatable edge. What signals you prefer, which time frames you like to trade, if you're a sniper, etc. I know from hearing from straters like Sarah, Dee, Jermaine, it's a booster for our psychology and can give us some ideas going forward. So I asked if she could speak to us about her specific process. And it turned out we actually came from the same trading service, Trick Trades, which is more of a technical analytical strategy of price action. I won't get into the individual that runs that service, but I will say the methodology has some value to it, which I believe that Jen still incorporates to this day. So if you guys have any questions throughout the presentation, please type them in the general chat, and we'll try and get to as many as possible afterwards. All right, Jen, I'm going to let you take it away.
All right, cool. First of all, thanks so much for giving me this opportunity. My only hope, obviously, is that it brings some value because time is precious for all of us. Definitely not here to say my way is the holy grail, but I think there are some things I do that increase my chances of success with the strat, especially at the open. You know, given the way the markets are trading lately, you're guaranteed to get some volatile movement. Then throughout the rest of the day, it's been a little iffy at times. As everybody knows, trading is just a game of odds. It's about increasing probability of success. There's nothing anyone's ever found that's 100% successful. I wish there was. First, when you're talking to a group of people, it's hard to know what everyone's knowledge level is. So I'm going to start with who I am so you know who you're dealing with, and then on to some very basic concepts, and then we'll get to more specifics. So hopefully everyone's cool with that. So first, just a little bit about me. I used to run a wealth management business, and I sold that business in 2019 because I was just tired of it, didn't believe in it anymore, and wanted more freedom. I also didn't want to deal with going through another 2008 with client money. It's pretty stressful, as you might imagine. Outside of trading, I like to help people. I'm a board of directors for one of my friends' medical spa businesses. Used to serve for United Way, member of the Financial Planning Association. Obviously, I'm a yoga teacher. That's why my handle is Yoga Jen. Spanish interpreter for our medical clinic, and a volunteer youth group leader for our church. So that's who I am. Now on to the important stuff. Before we get into trading and looking at the strat and how I've used it in a few examples, the biggest challenge, I think, for me and for most is mentality. Your attitude. Trading will beat you up. I mean, there's nobody that gets through a trading journey without feeling the fear, feeling the disappointment, frustration, and it's difficult to get through. But a few things I realized: the market doesn't care what you think. For me, that was super hard to get over because I used to be on the side of coaching people on where the markets are going and how their portfolio is going to be, not predicting the market, but people cared a lot about what I think. Trading's a different animal. The market could give a rat's behind. So coming into each day with a fresh set of eyes and just watching and letting the charts tell you what they're going to do rather than assuming it's going to go a certain way, you'll get killed every time that way. Focus on process instead of the money you're making. It's difficult, I think, for all of us. but you have to find a repeatable process or you'll never find success in this business. And you really have to do the same things over and over and over each day. And then lastly, tomorrow's a new day. So if you had a crappy day today, walk away. You know, if you missed a bunch of trades, there's always going to be some amazing trades tomorrow or the day after that. So short memory is critical to the trading process. These next few slides are very basic, but again, it's important to review. You got to know what type of market you're trading in. So how does price move? Uptrend, obviously, those types of markets are easy, right? So 2017, 2018, 2019, parts of 2020. You see in an uptrend, all the indexes are moving higher. So the Qs, S&P 500, IWM, and they're moving higher in conjunction typically. I know Rob doesn't like moving averages, but I throw a couple of them, especially on the daily chart, just to know where I am in space and in trend. In this picture, obviously, that black line is the 9 moving average, and it's moving up. So it's a clear uptrend. The key thing, and this is true even for trading smaller time frames, is in an uptrend, it's a series of higher lows and higher highs. That sounds so basic and so simple, but it kind of took me a long time to really get. Charts also look very orderly in an uptrend. Questions on that at all? Makes sense, right? Downtrend, some things to notice about downtrend: moving average pointing down, that's obvious, the black line, which is the 9 EMA again. The moves can be really violent. I think one of the key things about downtrends or misconceptions, price doesn't typically move straight down. In fact, some of the biggest up days will be in your downtrends. You can see on Apple's chart, for instance. Oftentimes you'll find that the market will move down in a channel, kind of like we see here on Apple, where it kind of hits the bottom of that channel. You get a violent upswing back to the top, and then it continues down. Next, sideways. And this is a current chart on Apple. It's a couple days old now, obviously, because I made this last week. But 9 EMA moving sideways, what that means for all of us that have experienced this is a lot more chop. And for me personally, you know, I struggled in October, which is part of the reason that I came up with a slightly quicker and different way to trade while we seem to be stuck in the sideways moving market. And especially with options, for those of you that trade options, in sideways markets, those profits can be there 1 second and a little turn against you and they're gone. So you really have to be a lot faster than you might typically otherwise want to trade. Next, I want to show you how I kind of go about the process of charting and reviewing, because with Rob talking about so many different time frames and screen space for most people being at a premium. And personally, I have 3 screens, but I don't know how he looks at 60 screens or whatever he has. It's hard for me to even look at the 3 that I have. But with that being said, what I do at night is I have one layout that has the 8 larger time frames on it, and I look for setups that I think are appealing. One thing to note, if you look at this chart of Apple, the daily chart in particular, and the weekly even more so here, when you see, like on the daily chart, that big down candle and then the green starting to come back through, that pattern 9 times out of 10 it's going to go up. I mean, even I would say 9.7 times out of 10, it's going to go up the following day. And in this case, it triggered the weekly, which has a similar pattern. It went from an inside day to a hammer candle. And then, you know, if we had the future days on, you'd see that it continues up. But one of my favorite chart patterns on the daily is when I see a big down candle like that, a bottoming tail going up. You can almost guarantee you're going to continue to the upside. So that's one of my favorite chart patterns. How I mark up my charts at night, I pay particular attention to the daily right now. And there's a lot of questions about how to draw broadening formations. What I do, and I don't know that this is right, but I've heard Rob say it several times, so this is the strategy I've adapted. It's not an exact science, but I'll find a 3 candle that's a way back, and I'll draw from the top of that 3 candle to the top of the next 3 candle that I identify. You see in this chart, it's represented by that pink dotted line. And then I'll do the same thing on the bottom of that 3 candle. You'll see in this instance, I don't have a 3 candle down there that made sense to me to draw to. So I chose that 2 down. And part of the key I found for drawing broadening formations is if you look at a chart, you kind of in your mind have to think, okay, if I draw it, for instance, if I had drawn it to those candles that are out of the range, that would have been so broad, it wouldn't have told me anything about where price action was currently, if that makes sense. You have to draw it in such a way that when you look at the chart, there's a possibility price could move relatively soon within that range. Otherwise, it's so far out of context, it doesn't really help you. The other thing that I do is I kind of came up with my own color coding system for monthly, daily, high of day, and close. So you see on this chart, and you don't have to write all this down. You'll get a copy of the presentation, and it's all in the speaker notes. But I use the purple lines represent the high and low from the previous day. The dark red line, the close from the previous day. The blue lines represent the weekly highs and lows from the previous week or the current week, depending, you know, sometimes I'll mark both depending on how far out of range we are. And then the monthly levels. So that's what you're seeing there. And then on the smaller time frames, I'll look for additional trends. In fact, on this trend, I drew what I like to call a mini trend on the daily, that pink down line. And you'll see how it looks on the fiber. And interestingly enough, you'll find during the day, the next trading day, it often will hit that line off the daily. It's pretty cool how that works. So it's just a little bit about how I mark up my charts at night. And I have a system, so I know the next day what I'm looking at. This wasn't created by me, but at Costumer created this lovely chart of all the different strat setups. And my favorites are the 212 bullish, 212 bearish. Anything that's an inside bar or break in either direction. And those I kind of concentrate on. That, and you'll see at the bottom here, the Rev Strat 122 and the Rev bullish and the Rev Strat bearish 122. And people always ask, okay, well, what's the difference between a reversal and a Rev Strat? A Rev Strat always involves a 1 candle. And that's really what the difference is. Whereas like and in this case, it's a 122, the 1 is back further, but it has to involve a 1 candle. Whereas like a 222, which a 22 bearish or a 22 bullish, I won't completely bore you. This is something you really have to sit, I think, and study and review and look at it on your charts. And one thing that really helped me get it faster is TradingView. And I have all the scripts I use in a document that I'll provide to everyone too. But TradingView will number your candles for you, and you can color code them as well. So when I was trying to learn the strat, that was immensely helpful, because otherwise it felt like everything moved too fast and I couldn't tell one candle from the other, especially when you're first learning. So this slide, this is just the typed up notes of what I explained about how I do my nightly prep. So I won't overly waste time on that right now. But in the morning, what I do, and we all know right now that you go to bed and the markets are up, you wake up, they're down. You go to bed and the markets are down, you wake up, they're up. I mean, it seems to gap almost every day, which can make it a bit more challenging, and I think throws people off. Just as a side note, oftentimes you'll find that a gap up will sell down before it continues back up if it's going to, and a gap down will oftentimes pop up before it continues to sell down if it's going to. So just as a side note. But in the morning, what I do, you see those blue sideways lines on my chart? They are what's called volume by price. And again, I'll provide all these indicators for you. I don't use regular volume because for me, I have found it to be somewhat unreliable, and I personally haven't found it useful. I'm sure there's many folks that love it. But what volume by price tells you is essentially where the concentration of buy orders are on any given stock. And so this chart in the morning, I'll look at it with pre-market on. I know that's another question people have. Do I trade with pre-market on or off? And oftentimes, and I'll show you this in a minute, I'll use a trading setup that has one view with it on and one view with it off. And the reason is that with the pre-market on, I can take a look at where that volume by price tops out pre-market, and I will also mark that level on my chart. And I will then go to the daily and find a daily level that corresponds closely to that particular level, because daily levels are going to be one of your strongest signals during the day. And the volume by price is also incredibly powerful. You'll find if you start putting it on your charts, you can tell just by looking at this that the top of that range is where Apple topped out for the day. It's uncanny how well it works. All right. And this is just a summary, so you can, after the fact, look at what I did and remember what I said, because I know it's a lot of information fairly quickly. Morning trading layout example. This is just showing you, okay, here we go with Apple on the Fiverr and using pre-market, and then next to it, the view without pre-market. Both of them have some things that are helpful to look at. What I like without pre-market is you can see very clearly a strat setup there right out of the gate going into the open. And that's a 222 reversal to the upside. With pre-market on, it distorts your view of what happened the previous day. I like to have it there simply because I can look at that volume by price without having it kind of mess with the opening candles. It's just clearer to see in that view. All right, so a few pointers for trading options, and then we'll get into 3 trade examples. And again, my hope is for people trading options that they've got some takeaways, because, with just trading the stock, you can have much wider stops, typically without losses that are going to be as great. When you're trading an option, you're leveraged 100 to 1. So those small pullbacks against you can really hurt you, as we all know. One of the things that I use TC2000 as my broker. And I don't know if all brokers have this, I would hope so, but they have an actual options chart that I'll look at the price movement there just like you would on the stock itself. So this picture is just a price of Apple calls, I believe. But we'll look at, hold on one second, where are my options? Trading. Oh, so what I was gonna say about trading options is use your broker chart, and I'll show some examples. I always trade at the money weekly options. I very rarely use out of the money options. They're more expensive, yes, and I understand a lot of new traders are hesitant to put more money on the line, but your stops are going to be the same. And trust me, when price starts moving, you want to be profitable as soon as possible with options. You really do. And if you're trading out of the money, cheap, what I call crappy options, especially in the sideways market, you're really, really going to get hurt. So best practice is to use at the money weekly options. What we're talking about here isn't swing trades. You know, that's a whole different ball game. Options move. You know, there's a function of volatility. In other words, there has to be swift and reactionary movement for options to be profitable. That is why I personally love the open. A lot of people hate it, but that's just because they probably haven't put a framework around how to do it, and it can be scary and it moves quick. And you know, it might not be your style, and that's okay. But understand, if you're trading options, the best times typically to enter a position are going to be from 9:30 a.m. to 11 Eastern Standard and 2:30 to 4 p.m. Eastern Standard. So that middle of the day area, you're often going to get a lot of chop, and you're going to get bored to death, and you're going to use your mental capital up, and you're going to end up walking away because you're so tired of sitting there, and you're going to miss good trades later in the day. So just keep that in mind. With options, just like with the stock, don't chase. If you miss your entry, wait for a TTO, a triangle layout, which just means some corrective activity back to trend to get into your position. Once again, with options, anything you do wrong will be magnified. So you have to be even more careful. When you are trading options and exiting a position, you want to exit on an up candle, what I call a push candle. That's how you're going to lock in the highest gains. The only time I end up getting out on a candle that's not a push candle is if I'm looking at the chart and it looks like I'm going to get stopped out, or I'm still slightly profitable, but the trend is changing and it's going to be a loss if I don't, you know, stop myself out, basically. Don't take your whole position in one shot. Start small, and you can always add on a small TTO that's a trend reversal. With stop losses, I know there's always a lot of questions about stop losses. There's different theories. It's really more art than science at times. For me, I pay a lot of attention to the trend I'm going in, and I try not to look at my P&L because options can have some crazy wild swings. But if the chart's still moving in your direction and you look at that P&L and it's way down and you spaz out and get out of a trade, which I've done many times, you're going to end up being mad later on, because you'll find that if you look at the chart after you get out of the trade, it's still moving in trend. It never really broke that. So, oh, 1 second, I'm going to close my office door. Kids are fighting. Kids are a fun wild card. Okay, so So stop losses. So I get out when out right now. There's always going to be multiple opportunities to enter your trade. So FOMO, it's one of the biggest things we fight. You got to work that out. You really do. That'll end up getting you every time. Okay, so on to my criteria for taking a trade and then actual trade examples. I like to use a strat signal and two of the following that increase my odds of success. So one's the daily level. Another is the point of control, which I'll get to in a minute. It's point of control is related to volume by price. And throughout the day, this point of control will move around as buyers and sellers move around, you know, with a concentration of buyers and sellers. So it can be very helpful. Trend lines are critical. Also double tops or double bottoms. So strat signal plus two of those. So first example is this 222 reversal up on Apple. And these are small trades, guys. I think they're 30 cents, 50 cents, something like that. But if you're trading 5 or 10 options, it's not a bad payday. What you'll notice is, you know, off of my nightly chart markup here, out of the gate, there's a long wick on this candle on the 5-er. And I'll get into how I can see it quicker on the 15-second chart in just a minute. But 222 reversal here on the 5-minute is very, very clear. And there's, again, always the question of what's your magnitude? Well, in this case, I've got that daily level, that pink line marked right above that also corresponds with the top of my volume by price here, which are those blue lines again on the chart. So that's my target. In this case, you know, I took my profit a little bit early because you can see that it also hit that dotted pink trend line. So if we're looking at my criteria for getting in, I had the daily close by before, I had a strat signal. And then getting out, I got out at the trend line, which wasn't too far from the daily level. This is just a breakdown, like a bigger picture to show you. Here is a chart of the calls that I was buying, and you can see there's a signal, a hammer candle, just like you would find on a regular stock trading chart. That was a signal to get in, along with looking at the 5-minute chart. And next to it is the 15-second chart. So part of what I struggled with for a very long time was when things are moving quickly, I tried using a 1-minute chart. 5 minutes sometimes can be too slow depending on what's happening and how markets are, especially with how back and forth we are right now. I like to look at the 5-minute for a bigger picture, but I need to break it down. And so the 15-second will give me quite a few more opportunities to enter a trade. I'll also use it if price is moving really fast and looks like it's got strong momentum. And I'm looking at the options chart, let's say, and there is no break and it looks like it may run away without me, I will find oftentimes an entry on that 15-second chart. So here you can see if you miss that hammer candle at the bottom, you got another chance here. You see that one candle on the 15-second right above, you could have jumped in and ridden it up. It seems like it's a crazy thing to do, I know, but you can oftentimes see things starting to happen on a chart before they do on the larger time frames. It's helpful. The next trade I'm going to go through is, and these are all on the same day, by the way. And this, once again, the major strat signal is off the 5-minute chart. And this is a 2-2-2 reversal down. And we have our strat signal that's clear. obviously. So what are my other criteria? I need two other things. So one is this daily level that reversal is right below that daily level. And remember, if you're looking for perfection with trading, you're not going to find it and you'll never get into trades. It didn't hit that daily level perfectly, but it came close enough. And the Strat signal is very strong. Those little dots are the point of control that is associated with the price by volume, the blue horizontal lines. And you'll see that my entry, that dot is behind the candle that I entered on, but it goes straight across. You can see the additional dots. It almost forms its own level of resistance there. So when I saw it fail at the daily level with that big wick and then two down, I got in right when it went below the point of control on this chart. And once again, you know, Rob teaches a certain way, and there's things that I'll do depending on the time frame and the particular trade that might not be textbook. In other words, he would have had you enter the trade on the wick of that reversal candle where it says RS22. I got in as soon as it dipped below those dots, the point of control, because I hit my three criteria: the Strat signal, daily level, below point of control. And then for magnitude, you're always looking left. So my initial magnitude is going to be to take out those two green candles to the left. And my total magnitude would be all the way back down to the open, right? If it was really weak, but it didn't make it there. And I got out at that hammer candle. Now I didn't have the trend line that you see drawn there at the time, that pink dotted trend line. So why did I get out? I got out because I could see that 5-minute candle was getting sucked up. I could also see it on the 15-second chart that it was starting to change trend pretty dramatically. So I'd rather take my gains than sit around and try to reach a target that I don't believe it's going to hit. Had it continued on to go there, I wouldn't have been upset because I'm out of the trade and I made some money. Okay, so just a review, different way to look at this. It couldn't break the mini downtrend. It's below point of control. Magnitude is yesterday's close, didn't quite hit there. I got out when the candle got sucked up. And then you'll see on the 15-second chart how price started to reverse more quickly. And remember that it takes 4 candles to make a 1-minute candle. And when I saw the inside and then this next 2 on the 15-second chart take out that previous level of candles, that big red engulf, the last big red candle down, I was like, all right, this thing's changing direction. And you'll see that it was followed by a higher low and so on. So it was the right thing to do. But just an example of how you can see that more quickly oftentimes on the smaller time frames. This is just a chart showing for that particular trade what I'm doing when I'm looking at the options price chart. And ideally, I'm trying to enter on one of these down candles. So I'm getting the best price and then exiting on a big push candle up. That's your ideal way to trade an option. All right, and then on to the final trade. This is a 212 rev strat down. And once again, my criteria are a strat signal plus at least 2 other things. So in this case, once again, we had that same daily level I traded off earlier. We also, this trend line I had drawn, once that 2 hammer candle hit where I exited the previous trade, I saw there was a break in trend, so that's signal number 2. And you'll see that it was heading right down and did end up below the point of control. My magnitude is only going to be to this red line here. Didn't quite make it there. As soon as I see it getting sucked up again, that's when I exit. So this is also what Rob calls a pivot machine gun setup, because you'll see that when you're looking for the magnitude is to take out all those green candles that ran straight up. Your magnitude is to take those all out to the downside. Now in this case, with options, once again, I could have waited, because you do see that it got all the way down there later on. But what I found oftentimes, because option pricing is a function of volatility, you see that all the following candles are kind of choppy, and it's not like a real swift, smooth movement in a direction. I think those additional candles, had I waited another half an hour or whatever it was, were like 10 cents. So it really wouldn't have helped my profit margin, and I would have had to waste another 35, 45 minutes for nothing, basically. So, you know, once again, in the market that we're at now, take your profits on a big swift wash candle like that. You're better off, and just walk away and do something else with your day. This is just another view and showing you once again what were my criteria for getting in the trade. And again, what I use is a strat signal plus at least 2 other matching criteria. Here we are on the 15-second chart. So I'm kind of watching these next to each other. And you see first that it hit that daily level and started to come down. And the neat thing is you can use this volume by price on the faster time frames, and you see here that those dots across are where the point of control shifted to on that 15-second time frame. And you'll see it's well below. So that's just more confirmation, you know, that that's a good trade to take. And though I'm kind of blowing up these examples, remember when I have my main trading layout there, I've got the daily, the hourly there. I'm looking at them all next to each other. But I wanted to kind of blow these up so you see how I whittled it down and what I was looking for. These are once again the option entries. So I waited for the option price to dip back. That's when I entered, and I paid myself this entry. Obviously, at one point, or this exit, I'm sorry, the price was all the way up at the top. That's where I got out, and then obviously started to drop because price changed direction. All right, so main takeaways are put your biases aside. Let price action tell you what it wants to do. That's critical. Price action is king. That's why I love the strat so much, and that's why I love Rob, because price action's everything. It'll tell you what you need to know. Your ability to form the right-hand side of the chart is crucial. I mean, I still have a lot to learn there. I've come a long way, but I don't think you ever stop learning and growing in this business. Like Rob always says, what's the next 2? Observe and study charts. They tell a story about buyers and sellers and where price is likely to go. And in the context of the strat, we've really got the big picture. Familiarize yourself with the daily chart and how it moves. I mean, I've spent just hours looking at charts and marking things up and seeing where price tends to go and how it reacts to gaps, those kinds of things. So I've done a lot of homework outside of market hours. I don't think you can become successful at this with any kind of quickness without doing homework outside of market trading hours. I think we all got into it hoping it would be an easy journey and we'd all be multimillionaires, but unfortunately it doesn't generally work that way. And then I also limit myself to three trades a day, generally. Every time you enter the market, you're taking risk. If you've taken 3 trades and they're all losers, probably just not your day. You need to walk away and stop yourself from revenge trading and really doing some damage to your account. And vice versa, if you're profitable and you've had a decent day, why try to shoot for more? I mean, the idea here is always to have more gains than you do losses, right? So just a couple other quick rules along those lines. If my first trade's a loser, especially if I didn't obey my rules, I'll walk away and kind of regroup because, I haven't been doing this 10 years. It takes me a minute to reset, and I found when I don't, I end up doing stupid things. If my first trade is a loser because I got stopped out and I should have stopped out, but the trade actually comes back and is still good and provides another entry, I'll try and get back in again. And I won't take that mental reset where I'll walk away from the computer. There's so much kind of art and experience to this. It's not completely scientific, otherwise it would be easy. If you need help or you have questions, I mean, we're all kind of in this journey together, and I've learned so much from so many other people that, this is just a conglomeration of some things I've found on my own and combined with other things that people have said, hey, look at this. And that's what we're all here to do together. So here's my Twitter handle, and you can DM me too on Discord, and I'd be more than happy to do whatever I can to help you or provide further explanation. But if you want to open it up to questions and.
Yeah, Jen, thank you. That was an amazing PowerPoint you put together. A lot of useful and very unique information with the point of control and the other indicators and the 15-second candles. So does anyone have any questions that you want to type in general chat? Because so far I'm not seeing anything. I guess in the meantime, I wanted to ask you, do you, I guess because you trade options and you kind of scalp them, right?
Here's the one thing that I'll tell you, Darren, is that I adjust my style for the type of market we're in. So back to trend, we're very much in a sideways type of market. And given that, I'm going to take my profits while they're there. When we're in more of a trending market, I'll be more apt to take longer trades, So I think being adaptable is what I'm trying to get at.
Yeah, that makes sense. And Archer, when he came on here, I guess a couple months ago now or something like that, he spoke about more that he was interested in doing swing trades when the VIX was down, the fear index. But I never thought about it in the context of, the overall trend of the market, like the way you put it tonight. So that's really helpful.
Yeah, the VIX too is odd. I mean, it is way down. It's kind of bizarre just because.
It makes sense to me that the VIX is down right now at all.
It's just odd. Like there's something odd. I've never seen.
Very weird. It's peculiar.
It's weird, right?
Because
Yeah, I mean, even with some of the uncertainty around the election and so forth, like it didn't care. Like it's a little crazy.
Yeah, it's not reflecting the volatility that's really in the market right now.
Yeah, exactly.
So, I do have a question from SS Olanki 72. Do you need to know the Greeks immediately?
No, so where Greeks come into play to a degree.
Oh, I'm sorry to interrupt you. He said, do you need to know the Greeks intimately? I'm sorry.
Intimately, no. I mean, we're not selling options. So if you're an option, we're buying options. So if we're an options seller, you really need to pay attention to theta decay and all those kinds of things. If you're a swing trader and you're going out 30 to 60 days, you need to pay attention to delta and know what that means. But, and if you're trading 30 to 60 days, just as a side note, swing trading, you want to buy an option that's a 70 delta. It's no more complicated than that. You just look at your option chain, buy a regular way expiry option out 45 to 60 days. And regular way expiry means third week of the month expiration for swing trading. And the reason you do that is people who swing trade only for a living, that's where those are the options they buy. So they're going to be very, very highly liquid. They're going to have huge amounts of open interest. I mean, you can look at Apple options out to December, regular way expiry in December, which is December 18th or so. There's a huge amount of open interest there compared to just the weeklies. But for our purposes now in kind of a sideways market, I'm just trading at the money options, period. I don't care about any of the Greeks, really. I mean, what you have to be careful with, Darren, as you know, is our spreads on some of these options. So like Zoom, for instance, is a cool stock, but it's more spready than Amazon. And Zoom can move, don't get me wrong, but Amazon's range already is huge. And I can get into Amazon typically for a 50-cent spread. Like, I don't know, so that's one thing. If I were to tell an options trader that's doing more of the weekly trades and not swing trading, the Greeks aren't as important, but your spreads and buying at the money options, that's critically important.
Yeah, I mean, I would say the majority of stocks that exist out there are basically untradeable. Yeah, options.
Yes, a lot of them, yes.
A lot of them.
Yeah.
So we have a question from California. He says 9:30 to 11 a.m. and 2:30 p.m. to 3 p.m. are the best times to buy options, right?
Typically. And now you can get a day, like Boeing today was on a tear. So you probably could have bought a Boeing option on any pullback and made some money. But the most volatile movements consistently, and we're looking for some kind of replicatable consistency, are between those hours. At the open, you've got everyone trying to position their portfolios from the day. You've got mutual funds that had sell orders from the night before and buy orders that they have to get processed. And that's why you get so much movement. I know a lot of their stuff moves in the dark pool and so forth, but you still see the reaction of it the next day. So you're guaranteed to get volatility that will move price at the open, guaranteed. And today wasn't the best example. I mean, it was choppy going into the close, didn't you think? It's just
yeah, absolutely.
Yeah,
and there were some I feel like there were a lot of stocks that were moving in the first part of the day, and then they just kind of stagnated or coiled into like a choppy mess.
Yes, and that's happened a lot since October. And that's not to say there haven't been handfuls of days where certain stocks are moving day to day, but it can be hard to track those. I think one of the biggest challenges for newer traders, and still for me, is I can't watch 92 different things because I will miss entries on all of them. I just can't. Like, I know Lauren, I don't know if any of y'all follow her or see what she says in Rob's chat room, but she'll trade like 30 stocks, but options are a much different animal. I personally just can't manage 20 different option positions. So what I do, especially right now, is I have a handful of probably 20 to 30 highly liquid optionable stocks with a lot of movement. Apple being one of them, Apple, Amazon, Facebook, typical SMH, which is the index. Sometimes I'll trade SPYs and Qs, but things that are very liquid and typically have enough movement, but you still, right now, in kind of a sideways market, are finding, it's just, you're getting that movement at the open and not the rest of the day in a lot of cases.
Yeah. And going off of that, Nandas asked, are you trading weekly or monthly options?
I am trading weekly. So the only reason, in my opinion, to trade monthlies is if you're swing trading. And if you're swing trading, you really should be going out typically 30 to 60 days and buying regular way, in other words, third week expiry options with a 70 delta. You can do real small swings of at the money options on a weekly out a week or two, but personally, I think it's harder to nail those types of things than, in other words, if I'm gonna do a true swing trade, that's 30 to 45 days in a regular way expiry with a 70 delta. For swing trades during the week where you're holding overnight or what have you, I'm always using weekly options.
Yeah, and also, I was going to say too, the further that you go out, a lot of times the spreadier it gets.
It definitely can be, yeah.
Especially if you're looking at like leaps, and it can get very spready.
Yes, absolutely.
I have another one from RC Roy 20. Hi Jen, so your entry and exits are off the fiver. You use 15 seconds for confirmation of trend? Question mark.
So maybe I'll just go back to that trading layout so y'all can see. Where's the? So you can see I do have the 15 up on my chart. So this is what I'm looking at during the trading day. So I've got the daily, the 15, the 5, the 15 second, and then after the first couple hours of market is over, I'll turn this pre-market chart off. I really only use it in the very beginning of the day. And one thing, let me point out real quick, that's super helpful if you do choose at some point to trade the open, or you just choose to observe this. I mean, I wouldn't recommend that anybody go out and just start trading this way right out of the gate. You really need to set up your charts and watch it and see how it moves so you get the feel for it. I don't think trading's so personal. I don't think anyone can just adopt what someone else is doing out of the gate and make it work 100%, but at least I do have a system that's replicatable with Strat +2. But you'll notice here with the pre-market on Apple, if I didn't mention that before, see the gray line right above the dotted line. Dotted line is yesterday's close. The gray line is that point of control. So you see on the 5-minute with pre-market on, it opened above the point of control that goes along with price by volume. That is a spot on indicator at the open for where price is going to be if it's above or below that point of control. It's incredibly powerful, like a game changer.
Tell us how you came across that indicator. I mean, I know I've heard of it before, but just how you started incorporating it into your trading.
So Trick had mentioned it, or from Trick Trades, he had mentioned it like once, kind of offhandedly months ago. I played around with it a bunch. And then some friends of mine that used to be in that group too, one guy was playing around with the volume by price. And I was like, oh yeah, I remember that from Trick Trades. He's like, I've been using it. So I threw it on my chart and kind of watched how it moved for a while. And because with anything new or a change in how I'm trading, I'm not going to go out and trade live with it right away. I'm going to take some practice trades, see if it's really reliable, because that's the smart and prudent thing to do. And so that's what I did. I threw it on my chart, watched what happened, And it's just blown me away. I mean, as far as indicators go, I completely agree with Rob in that they're lagging and they're not, 100% reliable or what have you. But volume by price is real time what's going on and where the buy and sell orders are. It is probably, in my opinion, one of the most powerful things you can have on your chart.
That's exciting for us to
Yeah.
know. I never used it before, so.
Yeah, it's a little weird to get used to, but what you'll find on these charts is if you look at the Apple 5-minute chart without pre-market on that's next to it, you see how the little dots kind of move around all day. It gives you a feel for what's going on and where buyers and sellers are all day. And it's just, when you get used to looking at it, it's just such a cool tool. It really is.
And I'm sure it's similar to the Strat. In the beginning, it's kind of confusing and overwhelming, and then at some point, it's just all you see.
Yeah,
Even without the numbers,
It's so true. And like I said, at the open, I haven't found anything more powerful to really tell you where price is going to be. And you can see it on the 5 and the 15. I should have scrolled that in a little more to show you the open on the 15, or I think maybe I did. Yeah, that is the pre-market on the 15. So you see on the 15-second, it's also above point of control, which is the gray line.
Yeah.
So powerful stuff.
I have a couple questions. Well, first off, Jason L said that TrendSpider has some great videos on how the volume by price indicator works. So that's a good resource.
Awesome.
FX asked, same week options or at the end of the week you buy next week?
So I just use same week. I love Fridays because it's cheapo option Friday. So you could trade something like Amazon, and sometimes you can get Amazon at the money options for $3 in the morning, depending. And a lot of times, because I'm pretty cautious with losses and position sizing, I only trade 1 to 2 option, Amazon options if I'm trading them. Apple maybe 5 to 10 because it doesn't move quite as much. But that's what's so cool about Friday is.
And I would just add to that too. Just if you're doing 0 day to expiry options on Fridays, just to be careful if you're doing it at the end of the day, just because the theta, it's rapidly quick. It's fast.
It is for sure. So, like if you do an end of the day trade, at that 3 o'clock hour, it's a pure gamble. I mean, you can get some great trades, but you absolutely don't. I mean, you got to be careful because you're so right. That thing.
I guess you got to be an expert with volatility, and you can see that it's coming in, and you're going to be in and out of that thing basically.
Yeah, and there's some kind of really good setup. Again, it's a strat signal plus a daily level plus, it's in the right relationship with point of control above or below it, Right. So you go back to your rules again. Okay, does this setup meet my rules?
Yeah, absolutely. I have another question from Kyle Formois. It's best to exit / close an option at the open for great push candles then, right?
Yeah, so obviously, first off, when you're getting into the trade, I think another problem for new traders is, okay, what's my magnitude? So you got to know where your magnitude is. And what I'm saying is if the trade's going in your direction and it hits magnitude or it's pretty close and you get one of those big push candles, take it and go. It may go a little bit higher. You may miss out on some gains. But hey, you locked in some green, and that's that's another nuance too, right? Because how do you know when to hold it later? I mean, really, it goes back to a system. So you gotta have your rules for getting into the trade, and you gotta have your rules for getting out of the trade. And my rules for getting out of the trade are: it's hit my magnitude, or it's very close to it, and it's a big push candle. Ideally.
And if it goes against you, you just get out because you're
It
trading
does.
options.
I
So
do. Yeah.
you don't put a hard stop on that.
No, I don't, because what tends to happen with, I found this so many times, I've experimented with hard stops, is it'll stop you. Market makers know, they stop you out and the thing turns around and goes right back to where you thought it
Oh
was
yeah,
going
they
to go.
definitely stop. They stop hunt for
They
sure.
stop on. I mean, there's no question. So it kind of goes back to, and this is where I find moving averages to be helpful. It's not that I'm using them to enter and exit trades, but like a 9 EMA and a 21 EMA on that 5-minute chart, at the open, if the 9 and the 21 EMA are still going in your direction, they're still trending up strongly, there isn't a reason to get out of that trade. You may look at your option P&L and there was a wild option swing and it went down, but that you're looking at the chart and the price is still going the right way. That's what you really have to focus on. And it's one of the hardest things to do. But if you don't, you'll never, you'll get so spoofed.
So I don't see any other questions coming in right now. Oh, wait, someone's typing. Oh, okay. Yeah. Let's see. No one's typing anything. 2 people are typing.
Cool, yeah, and just to make sure I reviewed, talking about magnitude for exiting the trade, that volume by price, once again, remember when I talked about my morning routine, is I typically put a line at the top of that pre-market volume by price and find where it corresponds to the daily level. I mark that line on my chart, and you can see with that first Apple trade, that's how I got my magnitude for it.
That's
Right
awesome.
here. And it's you can see the volume by price. It was right there, the open. It's uncanny. It's really to where like I feel naked if I don't have the volume by price up.
I think this is something I'm definitely gonna experimenting with probably tomorrow.
Yeah,
And
you'll like it.
I'll watch
Really
those Transpider videos tonight on it because I do have Transpider and I use that as a scanning device as well. So
yeah, Transpider's awesome. I just got it.
yeah. Anything else or?
I can't think of anything. Anything else that you were wondering about, Darren? Or
No, I'm sure I'll have some questions later.
yeah,
And I can DM you and we can we can share it with the group as well in general chat.
for sure. I don't feel
like you're missing out. So this was great. Thank you so much for doing this.
Yeah, absolutely.
And hopefully we'll have you on here another time.
Yeah, just let me know like what questions are out and if there's specific things we could really drill down to that.
Yeah, for sure.
Just, be flexible and know what type of market you're trading. And that'll give you the clue of whether you need to be quicker term or longer term,
Absolutely. Great.
Cool.
Well, thank you again.
Right,
and we'll talk soon.
All
Thanks,
right,
guys.
appreciate it.
All right. Have a good night, everyone. Bye.
You too.